Welcome to the Transparent FX Academy. My name is Nick and I'm a top podder on TRADINGVIEW. And as a top podder, today I'm going to show you exactly how you can become a profitable trader by exploiting multi-time frame technical analysis and order flow. Now let's not waste any more time. Let's go straight in the charts to find some good trading opportunities. The pair that I want to speak about today in preparation for the start of the trading week is CHF JPY. And the reason for which I want to speak about CHF JPY specifically is because number one, it is very near to providing to us a very good trading opportunity. And number two, because it is a very educational situation to analyze in order for me to obviously transmit some value in the video, because as usual, I will keep the analysis as educational as possible so that you will learn exactly what you have to be looking for when you're actually scanning the market and looking for opportunities. So what we will be doing is, first of all, speaking about the market from the technical side, obviously analyzing the different timeframes to find the direction of the market from a technical perspective. We will then go and see what we have from an order flow perspective on the CHF and the JPY to see what hedge funds, so the non-commercials in the market, are currently doing on both these currencies. So we will see the order flow for the CHF and obviously the order flow for the JPY so that we can gain an advantage over our competition in the market by checking and by trading together with the biggest institutions in the market. And by the end of the video, we will know exactly what zone we can be looking for an opportunity on in this pair. Now, let's start from the monthly time frame. Now, on the monthly, clearly, we can see that the market has created a very nice impulse to the upside. Now, after an impulse, if you want to measure the correction, what you have to do is obviously take your Fibonacci from the low to the high of the impulse. And what we can see in this case is that the market went clearly to test the 50% retracement, then broke above it, and currently is testing and rejecting the 0.382. So what the market is doing is basically moving step by step. First, testing the 50%, then testing the 0.382, and after that you can expect continuation to the upside, since that is how the market usually moves step by step, by touching and rejecting the Fibonacci levels. So on the monthly, everything is very clear. We're currently also testing this quite strong previous monthly resistance, which is now turned support. And we have the impulse correction and impulse pattern to the upside, as we have just explained. So at the moment, everything is acting according to the structure that the market has currently created from a monthly perspective. Going down on the weekly, what do we see? Now, on the weekly time frame, situation is as well very interesting to identify. However, we have a problem that I will now show you. Now, on the weekly, everything is clear. Why? Because the market has created this M formation. Now, in general, after an M formation in the market, what you want to see is a move to the upside to complete the M formation at the neckline. That is the previous support, which is now turned resistance. So from a weekly perspective, what we wanted to see from here is the market create this move to the upside, which is exactly what the market has just created. The market went and completed the M formation exactly as we wanted to see. However, the problem is that the neckline of the formation, which is the completion zone by definition, is an area of previous support, which is now turned resistance. And in fact, the market has already respected this resistance. But this is a problem. Why? Because this means that monthly and weekly are not showing the same direction. Because on the monthly, as we have just seen, everything is bullish. However, on the weekly, we just identified a level of resistance, which the market is currently testing. So if the market wants to continue to the upside, it needs to break this weekly resistance. So we have a level inside of the pattern that we would like to see the market complete from a monthly perspective, which will need to be broken in order for the pattern to actually work out. Or if the market will respect this area, the monthly pattern cannot work out. Another thing that we can identify from a weekly perspective is that the market has created this weekly candle here, this current trading week that has just ended. And this candle here is the candle which the next one is supposed to fill in the wick. When you see a candle with such a long wick, and a body which is the same size of the candle, what you expect is for the next candle to actually fill in this wick. So that is toward our monthly target. That is a point in favor of the continuation to the upside, because we have a candle which usually the next one does fill in the wick. Going down on the daily, what do we see? Now on the daily time frame, situation is extremely clear. In fact, from here, if you remember, I made a full breakdown explaining all the reasons for which exactly from here we wanted to see the market create this move to the upside. And that is exactly what the market did, making the move that we wanted to see exactly as we have spoken about. And I will link this previous analysis in the description so you can go and check it out for further reference and more free education. And I spoke about CHF JPY also after this move to the upside that we wanted to see, after the market had created this W formation. In fact, after this W formation, I made a full breakdown of CHF JPY when the market was here, explaining all the reasons for which from here we wanted to see the market create this move to the downside. And again, that is exactly what the market did, and I will link also this previous analysis in the description so you can go and check it out for further reference and more free education.
Just a quick reminder, make sure you comment below and you let me know which pairs or topics you would like me to analyze or cover in the next videos.
So on the daily, what we know is that we have a W formation that just completed at the neckline. Now, the neckline of a W formation, again, by definition, is an area of previous resistance, which is now turned support. And in fact, the market has already respected this zone as previous resistance, which is now turned support, rejecting it to the upside quite aggressively. Now, in general, after an impulse, if we want to measure the correction, what we have to do is take our Fibonacci from the low to the high of the impulse. And what we can see is that the market went for a perfect test of the 0.786 of the Fibonacci taken on this daily impulse, rejecting it to the upside as it was in perfect confluence with the structure resistance, which at that point is turned structure support. So the market tested exactly the Fibonacci level in confluence with the support from a structural perspective and rejected it to the upside very aggressively. So at the moment, the situation on the different time frames is quite clear. On the monthly, we have support. On the weekly, we have resistance, however, a candle, which the next one is supposed to fill in the wick. And on the daily, we have bullish structure after the completion of a W formation. So we have three time frames that are clear, however, they are contradicting themselves, which is a problem, because when the three time frames that give you usually the directional aspect of the market are not showing the same direction is a problem, because you will not have a high probability setup, which is what you're supposed to be looking for when you're actually analyzing the market. So let's see how we can approach this situation. But before I show you that, let's first go and give a quick check at what we have from a COT perspective on the CHF and on the JPY. Now let's start from the CHF. Now on the CHF, what we can see is that in the long term, we went from having 1.4K net positions all the way up to having 14K net positions that we currently have. In fact, with the last report, we can see that hedge funds opened 2.5K shorts. However, at the same time, they opened a lot more longs. In fact, they opened 4.7K long positions, bringing the longs at 21K and the shorts only at 7.2K. So the CHF is still quite strong. And if we go and see what we have from a JPY perspective, we can see that on the JPY with the last report, hedge funds have closed 720 longs and opened 5K shorts. So definitely the CHF is getting weaker, with net positions gradually decreasing from 29K all the way down to the 14K that we currently have. And we might be approaching the negative side from a net position perspective, possibly with the next reports, if this will be the trend that will continue. So if hedge funds will continue to shift their positioning to the short side. In fact, if we look at the shorts, we can see that we went from 17K shorts to now having 32K shorts. And if we look at the longs, we can see that they decreased from 59 all the way down to 46K. So the JPY is getting weak. Now, a weak JPY should give the possibility to the market to create this continuation to the upside. However, looking for a long at a weekly resistance area is extremely risky. Now, as usual, guys, monthly, weekly, and daily are the best time frames when it comes to the direction of the market. But the best time frame when it comes to confirmations and entries is the 4 hours. And at the moment on the 4 hours, we can see that situation is quite bullish. because the market has just broken above structure, started to gain some momentum, already created a stop hunt of the stop losses that were below this area before grabbing the liquidity and creating the continuation to the upside. So at the moment, situation is quite bullish. However, we won't be looking for any kind of longs with students until we will see this weekly resistance holding. Why? Because it's simply too risky to be looking for a longing opportunity at a weekly resistance area. So how we will be approaching this with students? Well, we will be waiting for the weekly resistance to break to the upside. So if this weekly resistance will break to the upside, if the candle that we have, the next weekly candle will actually close above this area at that point, that is where the opportunity will come. Because if the market will break above this structure this week, then at that point, after the break on the retest of the structure, this is where the opportunity will be, where all time frames will be aligning, monthly, weekly, and daily. And after the break on the retest of the level, exactly inside of this zone, we will be monitoring price action with students from a 4-hour perspective, knowing that all time frames are finally in confluence, and as soon as the market will provide to us one of our valid entries, we will be taking a nice long with a very good risk to reward and very good probabilities at that point for a nice move to the upside. However, I wanted to show you, which is a very important concept in this video, when it's best to wait unless you are a very aggressive trader. If you are an aggressive trader, you can be looking for a long. However, you must know that it's very, very risky because the market from here can easily break to the downside because we are at a weekly resistance area. The market can easily break to the downside, and if it will break to the downside, then we have up the possibility to go for a retest of the monthly support. So if it will break to the downside, stay tuned because another great opportunity will come after a retracement, and I will try to keep you guys updated on all my platforms.
If you enjoyed the video, make sure you smash that like button and comment below. It really does support the creation of more free education and analysis for all of you. Also, make sure you go and check out the mentorship program. You find it linked in the description. You first learn all the rules of my rule-based strategies in the program, and then you trade them live with me. In fact, every single day you get a new daily market breakdown showing you exactly how to apply the strategies with entry, stops, take profits, as well as having me answering every single question that you have every day, including the weekends. So I really suggest you go and check it out. The link is in the description, and I will see you in.